Hey guys, how you doing? It's Will Caban, the Mortgage Man. So the Federal Housing Finance Agency announced yesterday that there's going to be some exposure limits to servicers and their obligations to pay back loans in forbearance. Now this is a really big deal and I want to explain why, but in order to understand why, we have to go back to why servicing is a big issue and how it's impacted the market so far. So servicing obligation basically states that when a person goes into forbearance, they still have an obligation contractually to actually continue making the payments on those servicing mortgages. So all servicers, and this is where some of the convolution came into play with the forbearance and COVID and the CARES Act, all servicers were and still are required to make those payments, right? If somebody goes into forbearance for 6 months, somebody has to make those payments, and it wasn't clearly defined for how long, how much, etc. So servicers kind of had to retract in the market, and that's where you started to see a lot of the ratcheting down for a lot of the loans that you see right now, i.e. non-QM, jumbo loan restrictions, and FHA, VA, USDA, government loan restrictions. And the reason for that is primarily because servicers are on the hook for all the payments that have to be made. Now, the FHFA basically announced yesterday that there's going to be a servicing limit of 4 months for all servicers to pay back the obligations that they have. Now, why is this such a big deal? In addition to having a stopgap of 4 months, the payments only have to be interest, and the really big deal is it allows servicers to actually have some sort of budget in place so that if someone does in fact go into forbearance, and I think yesterday it was announced that 5 or 6% of FHA loans went into forbearance. So that's a pretty big deal when you really think about it. It allows servicers to actually put a budget in place for how long they have to pay interest payments for those servicing obligations. So may not sound like a big deal, but in the market, in the news, it is actually a really big deal. So just wanted to share that with you. Doesn't necessarily mean it's going to be immediate changes to any of the loan programs, to any of the requirements that changed through CARES Act and COVID, like the minimum FICO scores and the maximum DTI, but it's a step in the right direction. It limits the exposure and it limits the liability for a lot of these servicers, which was a really big concern internally for a few weeks, to be honest with you guys. All right, just wanted to share that great news with you. Some positive news in light of everything that's going on. And if you guys need anything, you know where to find me. It's Will Caban, the Mortgage Man. Take care.